All right. Hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic, and I hope you're doing fantastic because in today's video, what we're doing is we are going to be taking $12,000, yes, but $1,000 every single month. We could do 500, but let's do 1,000. We're doing $1,000 earned every single month times 12. This will be our annual income, $12,000 in annual income. And we will be taking the dividends from multiple ranges of dividend stocks. We have a 1% dividend stock, 3%, a 7%, a 16%, a 40%, 70%, and then 162% dividend paying stock. And what we're going to do here is we are going to see how much money we need to invest in order to be earning about $1,000 every single month. So if that does sound good, if that does sound fun, please do remember to subscribe. We have a bunch of videos like this. We're up to 4,039 subscribers. So we're pushing new subscribers every single day. I want to say thank you to everyone who watches our videos, everyone who subscribes and engages in our channel, because overall it just makes our channel much better. So with all that being said, I say we start with the lowest paying dividend stock. We have Walmart. And by the way, guys, I have not hundreds. I have about 100 or so great long-term paying stocks that I could go through. I chose these dividend yields just because I wanted a good range to show you guys how much income you'll need to earn $1,000 every single month from all these different stocks. So let's get into the first one right here. We have Walmart. And another thing that I'm going to do is while I go through these stocks, we can also list some benefits about them and their strategies as well. So Walmart, 1.39%. So what we're going to do here is we're going to take our 12,000 annual income, we're going to divide that by 1.39%, and that is going to give us about $863,309. So $863,000 is what we'll need to start earning $1,000 a month from Walmart in terms of dividend income. But obviously Walmart also appreciates well over time, so that is something to keep in mind when you're investing in these low dividend yielding stocks. You also get some stock appreciation. But for Walmart, $863,000 is what you'll need to earn $1,000. Moving on to the next, we have Exxon with a 3.69% dividend. Exxon, honestly, a pretty similar story to Walmart. They do appreciate well over time, and 3.69, beautiful. And you can see here they do appreciate pretty well over time, going back to 1985. So this is another stock that pays a relatively low dividend, but still has good long-term appreciation. And you could see here, just by pretty much doubling this dividend yield, we are significantly, well, more than doubling, but we are significantly reducing the amount of capital we need invested in order to earn $1,000 every single month. So from Walmart, which was $863,000, we're moving to ExxonMobil with a 3.69% dividend. We now only have to invest $325,200. Now, understandably, this is a lot for monthly income. But one thing that's great about these stocks like Exxon, Walmart, and the next one, which is EPD, is that they tend to increase their dividends over time. So this $1,000 every single month could potentially turn into $1,100 if they increase their dividends by a 10% marker every year. So Exxon, needing about $320,000, still a huge amount of cash flow in order to invest. Now, doubling the dividend once again from $369 to about 7.31% with EPD here. Now we're going back. Let's go back to 12,000 here. We're going to divide by 0.07, and I forgot what that was. 31, perfect. I hope you're sticking with me here. Beautiful. So we are going to now only need, with a 7% dividend, we'll need about 164,000. We'll call it 165,000 just to keep the numbers nice and easy for EPD, Enterprise Products Partners. That is with a 7% dividend. And just to show you as well, I pulled up the max price chart history here. With a 7% dividend, you can still see there is a good amount of appreciation over time. Now, one thing that I did want to show, and the reason why I have these charts up, is you'll see here with the smaller dividend amount, the smaller payouts, you could see that the price charts tend to have better appreciation over time. So with a 1% dividend, this is Walmart's. With a 3% dividend, this is Exxon's. With a 7% dividend, we are still seeing some growth in the stock price. So 7% might be that kind of Goldilocks zone between we have great dividends coming in and we also see some capital appreciation. The next stock that I want to show you is going to be SVOL. And the reason I chose SVOL is because it has a 16% dividend. We'll call it just about double of 7%, so 16.23%. And let's see how much money we'll need to get $1,000 every single month at 0.1623. We'll need about $75,000. That is significantly less. You can see here that as we increase these dividends, we are using significantly less amount of invested capital in order to receive this $1,000 every single month. And for SVOL, you can see here over the kind of the full price chart history of SVOL from 2021, it had a downtrend which started about $25, went all the way down to about $20. But you can see here in 2022 to 2023 and into 2024, it's pretty much remained about the same marker. So at a 16% dividend, SVOL has kind of held its own for the past year or so, which is great. Imagine receiving a 16% dividend and your price appreciation pretty much stays the same, or even could potentially have appreciated a very little bit. And so with $1,000 coming in every single month, that was $75,000 invested. Going to our next stock, we are doubling once again from 16 to a 40% dividend. And I do actually have the long-term price chart history of QQQY. You could see here that over the pretty much the max price chart history, it went from $20. And this has an underlying stock, which is the NASDAQ 100, which has appreciated well over time. But you could see here the stock still kind of trends downwards, but with good reason, because it does pay a 40% dividend. So let's get into that right now. So we have $12,000, which is $1,000 annually, or sorry, $1,000 monthly multiplied by 12 months. So that's annually. And we're going to divide that by a 40. We want to be really exact here, 40.079. So that will give us $30,000. $30,000 invested into QQQY will result us in a $1,000 a month income. Now jump into the fun ones. We are multiplying that dividend by 2 again. We are going to TSLY, which pays roughly an 80% dividend. We're at 76.58% currently. And so let's do the income on that. So we have $12,000. We're going to divide that by 0.76. Checking back here. 7658. Let's do that right now. 58. Beautiful. So at 15,000, we'll say 16,000 to keep it real. $16,000 invested into TSLY, you could expect potentially $1,000 worth of income. Obviously, with TSLY, the Yieldmax funds, the dividends are definitely subject to change. As most of you guys let me know in the comments, they write synthetic cover call strategy. They are synthetic cover call strategy ETFs, meaning they do write options and they get paid based on the performance of the underlying stock, but it's correlated to the options that Yieldmax writes on those underlying stocks. That may all sound confusing. Basically, they make premiums by writing synthetic cover call options on an underlying stock. For TSLY, it's Tesla. And with $16,000, you're basically receiving almost all of your capital back, because you have $16,000 and could potentially receive about $1,000 every single month. But obviously, you have to look a bit more into TSLY and their stock price history, because it has been pretty downward. But now moving on to Coney, doubling again. This video has been a double of dividends, and we're getting to the biggest one yet, which is Coney at 162%. So we're going to take our $12,000 and we are going to divide it by 1.62. Yes, 6249. Let's be exact here. And with a $7,500 investment, you could expect to potentially receive about $12,000. Obviously, when you're investing in these extremely high yielding dividends, the dividends are subject to change, and so you're not necessarily going to expect $1,000 every single month. But if you were to invest about $7,500 right now, you could potentially be earning about $1,000 every single month. It sounds extremely crazy, but those are just the premiums paid off of Coney. But obviously, you also have to factor in the stock price appreciation of each of the stocks to make sure it fits for your kind of investing style. So with all this being said, this was $1,000 a month from all these stocks. We're looking at about $800,000 from Walmart, $325,000 from Exxon. We're looking for about $165,000 from EPD, about maybe $75,000 from SVOL. QQQY would come in at a much smaller marker, about 30,000 or so. TSLY was about 16,000, and then Coney, of course, $7,500 to earn potentially $1,000 every single month, which sounds ridiculous. It is, just depending on the dividend yields. With 162% current dividend yield, that is insane. Now, I hope you guys did enjoy this video. This was just a little video that I wanted to compare some dividend yields and show you guys how, sure, you know what, the higher dividend yields, obviously they require a lot less capital to invest and return a bunch more dividends every single month. But one thing to keep in mind is obviously the share price appreciation. Your dividends from your high yielding investments, they do have to outweigh this depreciation in terms of the share price. And if they're able to do that, and you obviously return a good percent on those dividends, then that could be a good investment. If you're making 16% and your stock price potentially appreciates a little or stays the same, you're earning 16%, or could be 17, could be 18 if the stock appreciates 1 to 2% a little bit. So there's pros and cons to every style of investing. Obviously, with the high dividends, it's a lot more exciting because you're receiving those massive payouts. But over the long term, some great, amazing dividend paying stocks like EPD, like Exxon, like Walmart could potentially provide insane and amazing returns. But obviously, you do have to give time for compounding, like all stocks and dividends in general. So I hope you guys did enjoy this video. If you guys did enjoy, please do remember to subscribe. We're up to 4,039 subscribers. If you guys did enjoy, please like the video. If you guys don't mind, it's all up to you guys. And I hope you guys got a sense of what $1,000 every single month looks like when comparing different dividend yields. I found this very fun. If you guys found it fun, you guys know what to do. But I will leave you guys to have a great day. So I will see you guys in the next video, and I hope you guys do take care. See you later.